Alright guys, so I'm gonna try to make a video for you today on how to ride a channel, how you don't care about the price, what's going on, is it gonna continue or not, where is the drop, where is the correction, all that stuff. All I'm gonna use is just a channel and divergence. Those two things are more than enough for you to actually ride a channel and to keep going with the channel. And basically what you need to watch all the time is a major divergence in any swing. So let's say I'm looking at 4 hours and the market keep going down, 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 and then bam, it puts a diversion at a certain candle, a major divergence. That means I know that there's some movement against the trend is going. Either the market is going to change the direction completely, or the market will do only a 3 waves against that trend to correct it. So every time in a bigger time frame you see a major divergence, you'll think one of two things going to happen. Either the market will do just a 3 wave against the main trend, or the market will completely change direction. That's why I always sell, or I always go with the divergence against the trend, not knowing if it's only 3 waves or completely reverse of the trend. But while you're trading this, you will find out, is it completely against it, or is it just a reversal? What is it? Now, in every trend, like I said, at the very end of the trend, you will see a diversion, most likely. Usually you can see this diversion in the 4 hours or 8 hours. This is the major divergence that I play, but you can still see it in the 1 hour. Playing the 1 hour, basically, it's so much noise, so much stuff that might get you in a bad trade. But let's start from here, where we all called this candle right here a reversal, or this candle here, because it didn't break the previous low. This candle right here, we all went long here. Some of us, like me, I was hoping for only 3 wave and going down, or not. We'll find out how and where do you see, is it gonna continue or not, or what's going on. So let's get this candle in the 1 hour. This candle, how did we all find out that the market here at this specific candle either gonna make a 3 wave against the main trend that was going down, or it's a reversal? We have no idea, but to find that out, it's so simple. The price right here went low, so we have lower low, but in RSI you have a higher low. So this by itself tells us that the market is so tired, the downside is so tired, there's no way the market can continue. If the market really wanted to continue and go down, they have to go down in price right here, and in RSI they have to go down right here, and they have to move, they have to take out this pivot right here, this area right here, this tiny one right here. The market needs to take it out. The market is challenging this pivot by this pivot, which is the same thing in the price. You have to always watch the price and the RSI together, or whatever indicator that you use. So this pivot and this pivot, that's the play. So right here we know that the market have to go continue up, but we have no idea, is the market going to go up in 3 waves to correct, or the market is going to continue to reverse? This is basically an indication for a beginning of a swing trade. So I went long right here at the very bottom, and I said that in the Discord group, and we all know that we went long right here. But all our expectations is either 3 wave or a continuation for reverse. How do we know where to stop, where to put our trade, what to do? it's basically all based on channels. In order for you to make any channel, this is a channel, all you need is 3 pivots. 1, 2, 3 to make any channel. And in order for you to put the channel right here, there's a lot of people will think, oh, you know what, let me put the channel. Let's assume all this price didn't come yet. Some people, they will put this is the first pivot right here. They will put this is at the second pivot, and they will put this one at the third. So you will put 1, 2, 3. A lot of people will do that, and that's actually not bad. And you do the channel like this. For my trading, what I do is I never make the green channel going down, because right now I know that the market is going up, so I always use red channel for downside, for corrections. This is one of the most important things that I make. I use red for going down, green for going up. And why did I know that? Because we already have a diversion here. It's a bullish diversion, so we know that with this bullish diversion we're going up. So the main direction right now is up. We don't know if it's 3 waves, if it's only correcting the previous trend. We don't know if this is going to continue. We have no idea what's going to help. But you know, the only way for us to know what's going on is to draw a channel. So the market is going up, so I'm not going to use the red. The red is only for correction. I'm going to use the green. Now, the first thing you need to do after you got this long right here is you have to find 3 major pivots, so you can put your red channel for the correction. This is the most important thing, and this is all you need to do is just wait. You know that this is a major pivot. Why it's a major? Because this is where we got our diversions. We got up, then the market start going down, so you know that this is here, the first pivot that you have to use into your channel, because it's a major pivot. Now the market went down right here. You did not see all this action. You have no idea what's coming, and then the market start going up again. So you know, you're thinking that, okay, I got a second one. The market went up again, and then start going down. Right here the market start going sideways, and here sideways, and then bam, this one happened. This one right here, it's a free money. It tells you that the market is extremely tired and it cannot take the downside. Why did I find out that? Why did I know that? It's so simple. You bring your Fibonacci tool, and this is the swing high. The market went down and it corrected between 50% 618. It could not go down, but look at the RSI. What happened? Same Fibonacci tool. You go from here, this is the low, this is the high, and bam, the market went more than 100% down. So in price, the market corrected only 50%. In RSI, the market went way deeper than 50%, and it went all the way to 100%. What does that mean? That it's extremely tired, and because this is by itself is going to offer us what we call a hidden diversion. What's a hidden diversion? That the price here went lower. You see, between those 2 pivots right here, it went lower, but the actual the RSI went lower, but the actual price went higher. So this by itself, it tells me that, okay, the market is tired, the market cannot keep going. In order for the market to really keep going, the price needs to spike down all the way right here and to take this pivot, or to take this pivot. We actually make it from here to here. See, this is going lower, this is going higher. That tells me that the market is tired. The market cannot, in order for the market really to go lower, it has to spike all the way from here to here, and bam, it takes it down. That means they're going to erase this diversion. Once they erase diversions, that means continuation to be coming. Every time you see a hidden bullish diversion or a hidden bearish diversion, and then you see the market takes it out, that means continuation in the same direction. If the market went this way and it broke it, this one spikes down right here, it's still lower low like this, and then the market comes from this pivot and it spikes down right here and it's going to be lower low. So both of them are lower low, so there's no divergence. That means continuation to be coming. But because the market went up and right here went lower, that means it's tired. And we got here 50%, we got here more than 100% of that swing. That swing right here, boom, we passed it. So right here, this is another confirmation for whoever were long here. You know that, okay, you're in the right trade. It doesn't matter, all this doesn't matter, but right now you got your 3 pivots. Right now you got the beginning of the swing trade. You got the beginning of where do I put my stops, how do I trade and everything, because you got 1, 2, 3, you got 3 major pivots. Now what I do at this point, I get my channel and I put my 3 pivots right there. 1, 2, 3. You can do it this way. Some people will actually take this channel and say, oh, how do I know that those are the pivots? Why don't I do from the bottom right here to the top right here and I reflect it here, or I reflect it here? Why I don't do a sideways channel like this? Okay. In order to understand where you put your 3 pivots, you have to understand this. This was a bullish diversion. That means the arrow is going up. Every correction, again, is that it needs to be going down. The correction cannot be sideways like this. The correction cannot point up. The correction have to be going down. What does that tell me? That this channel, it has to be, I have to draw it either this way in an angle like this, or a more angle like this, but it cannot be sideways, or it cannot be to the upside. If it's for the upside, I have to use the green. And why I use the green? Because I'm expecting the market to go up. So every correction I'm going to look for, I'm going to have to be pointing down with the channel in red. That tells me where is the correction. And when I draw the green one, it's the other way around. I go from the bottom right here. You see, this is, we know it's a major pivot. Why I know this is a major pivot right now? Because we already have diversions, hidden bullish diversions on it. So I know that this has to be one of my pivots right there. And of course, I'm not going to reflect it here. I'm going to reflect it here. So I grab this all the way here. So now you have a beginning of a swing trade, a beginning of making money, not knowing what's coming next. Why? Because you have a green channel and you have a red channel. Red channel goes for the corrections. Green channel goes for the main direction that you're expecting. You have no idea if the market is going to make 3 waves and then goes down or not. You have no idea if the market is going to continue up. How do I actually think, how do I say, okay, the market is tired, it's over? It's so simple. If the market wanted to go down, the market needs to break my green channel. No matter where I go, you extend your green channel. The market wanted to prove that the whole thing is over, you gotta break it. And as you see, the market just continue going with it. It did not break it yet. But you did not see all the new action. You have no idea. All you know, you are right here at this pivot that you have a hidden bullish divergence. Now, you're right here. First, you're here. You come to this point. Where is your confirmation that you are in a great trade? Something great is happening. Of course, right here, the red channel break. The correction channel, which is the red channel, I always make it in red. You can pick whatever color you want, but I make it in red. So the correction channel, it's the best indicator for you to tell you that what's going on. If the price is going to come here and break this channel to the downside, what does that mean? It's over. we're going down. If the market is going to continue and break it to the upside, what does that mean? This channel is my play. And most of the time, a lot of time, you will see that the price will go, break the channel, comes up, comes back down, test the channel without entering the channel, especially the red channel. When the price enters the red channel again, one of two things happening. Either you draw your channel early because the correction did not finish yet, or the market is absolutely ready to spike down. So the red channel is extremely important for me, because once I identify a correction, if the price goes inside the channel again, that's it. I start thinking about where should I take off profit, what should I do, should I make my trade a free trade? And usually a free trade is the main goal for everyone that swing trade. A free trade means that I enter the market, let's say, at 9,200. And the price went up and keep going. I put my stops at 9,200, so it's a free trade. The market want to come back, take the trade off the table, that's fine. I don't lose any money, so it's just free. And the more separation happens, the more that the market keep going up, the more I keep moving my stops up with it, and secure money. Now the market came right here. Let's say that you didn't take that trade, you didn't take the divergence trade, the first one, or you didn't take the divergence trade, the second one. A lot of people, this is very common, a lot of people, what they do is they take the channel break. Channel break right here, which the first candle was this one. It closed outside the channel. The second came up, then came down, tested the channel. Right here, a lot of people take a trade. When they take a trade right here, where you put your stops, the aggressive traders, they put their stops at the end of the channel. Some people, they put their stops, which is, I do that a lot, at the middle of the channel. Show the middle of the channel line right here. So if I enter a trade at 95, my stops at 93, at 94, so $100. So I take a trade right here, $100 loss. It doesn't matter if the market comes back and enter the trade, enter the red channel. That means either I draw the red channel wrong and the correction is still going, or the market is ready to go down. And in either way, I'd rather lose $100 than continue to see what's going on. So now you enter a long right here. Let's take the middle line off, and the market start to give you separation. Now, when the market starts to give you separation, of course, you have to extend your green channel. Your green channel, you have 3 pivots, which is right here. 1, 2, 3. You have no idea what's going to happen next. At this candle right here, it went outside the channel. You were so scared, but the red channel held the move, and then it went up. So the next candle, you're fine. Now, the market keep going up. Every time the market wanted to make a correction, the market usually makes a correction in a 3-wave shape, like something like this. Okay? Of course, this is Elliott, but you don't have to know ABC or something like that. Sometimes it goes more complex than ABC, but what you really need to watch is only, forget about Elliott, forget about everything, only you need to watch 3 waves, 3 structure, 3 swings. So now, right here, the market start to correct again. We have a top and RSI right here. That top indicates, something is going to happen. The market need to reset in order to continue. How did the market reset right here? You have 3 swings. You have, this is the 0, 1, 2, 3. So the market, and the market, the second one went higher, which is something that you're going to see. But look at RSI. It did not go higher. 1, 2, 3. The second one is not higher. At this pivot right here, I already know that I have a divergence again. Why? Because the market went higher high, where the price, the price went higher high, where the RSI went lower high. What does that tell me? That we are definitely making a correction. So what I do at this point is I grab another red channel. Let me copy this. Let me grab it right here. Now, to draw the channel right here, you remember what I said about how you draw the channel? A lot of people will draw the channel this way, from one pivot to the other, and then they reflect it lower, like this. Or when the market went down, they were reflected like this. This channel is pointing up. This channel, it's actually not a red channel. It's a green channel. Why? Because it's pointing up. I'm expecting the market to go up, so my red channel has to be pointing down. So now you have to redo your channel, the correction channel, in the right way, where you go right there and right there. This is the right way to draw. Okay, I got it wrong right here, so I have to get it like this. I got 1, 2, 3. How did I do it? 1, 2, 3. Now, at this pivot right here, like I told you, always at the end of the red correction, at the end of the red channel, you have to have a divergence, or you have to have a reason why is the market continue up. Why did the market stop right here and continue up? Let's see why. Let's again grab our Fibonacci tool and let's look between this pivot. From here to here, from here to here, the market made 38.2. So you got a correction that went 38.2. From which pivot to which pivot? From this one to this one. So from here to here, what did RSI did? Let's see. RSI went more than 90%. So you have 38.2 and you have 90%. So you know that the market is absolutely tired. A market cannot go down. If really the market wanna go down and prove itself strong, this has to spike all the way to here to take this pivot and to erase this, you know, or to actually show me strength against this pivot. Right here, you know that continuation is coming because it's not working together. Another thing right here that happens, you came down so close to actually test the green channel, but you didn't test it, and then the market continued and bam, it went here. What is this tells you? This candle right here, what do I know from this candle? I know that there is continuation to be coming because the market broke the red channel to the upside. And this is actually exactly where I started to say, okay, maybe I need to go long. I was trying to short the market. I was hoping for 1, 2, 3, ABC, and then the market to go down. But the market came here and bam, broke the channel to the upside. What is that going to tell me? That we're riding a channel, we're riding the green channel. Whatever we do, we just have to keep moving our stops to the upside, move to stops upside. As soon as you have enough separation here, you have to start moving your stops either to the bottom right here or to the break of this candle right here. This is how I play myself. So let's say if I were long from here, I would put my stops right here. So I gain all this, not knowing what's coming or what's going to happen next. All I know that if the market want to prove me wrong, come back to my red channel and break it to the downside, or break my green channel. You keep going with it. The market again start doing a correction. What kind of correction do you see here? Before this happens, a lot of people, they thought this is the correction, where that's fine. Let's see, C, Control V. Let's grab another red channel. Oops. Removed my green channel. A lot of people did this that way, which is not bad. And bam, you break it again to the upside, and then it does this one here and it came down. But at this area right here, what do you see in RSI? What I see in RSI is we went lower low, like let's assume starting from here. So you get 1, 2, 3, A, B, C, where you got A, B, C, but the C did not even break the bottom right here. That's by itself, it's a signal there is continuation to be coming. Why? Because you have divergence. You have divergence between this pivot and this pivot right here. This pivot have diversion with this, which is hidden bullish divergence. You have that. Plus, you already broke the old divergence. Look at this. Between this pivot and this pivot right here, in RSI, you have reached it. This one and this one. And what does that tell you? That definitely, 100%, there is more upside movement to be coming. Because if the market want to prove me wrong, it's so simple. The market needs to spike all the way down to erase this. So I have divergence with this, and I have divergence. So let me show you with them here. I have divergence from here to here. I have divergence from here to here. That tells me that continuation to be coming, and tells me that this pivot right here, this candle right here, it's major. So if I draw my channel right here, the red channel, if it was right here, I know that this right here, right now, it's included in the correction. So maybe this was what we call in Elliott ABC flat, running flat, you know, like boom, 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 3 wave. Now, you can actually try to do this. If you do it that way, what is that going to tell you? It's sideways. I don't like this. So you're going to draw 2 channels. You're going to leave the channel before that you did, that you got to break to the upside, and you're going to come here again, and you're going to do another channel to the downside, red channel again to the downside. Let me draw another one. You can do it in 2 different ways, which is there's 2 pivots right here reflected from here. You can do that. Or you can do from here to here like this. What happened again? You broke to the upside. Every time you broke to the upside, what happens? You need to start taking your stops from here to the next one, to the next one, and so on. Now what I call this is I'm writing the channel. I don't care based on anything else what happens, because the market want to prove me wrong. All you need to do is spike down, break the green channel right here. Once you break the green channel, you're already going to take me out. I'm out of the trade. And the market can do 3 wave right here that can go outside the green channel and then goes up. How I'm going to know if the market will have continuation later or not? Let's say the market went, let's copy this, or let's take this channel. Let's say that the market went crazy on me right now. It went boom, boom, and then bam, spikes down like this. If you have this, how are you going to draw your channel? It's so simple. You get your pivot right here. The second pivot goes here, right there, and the third one goes here. So you have a channel. How do we know that the market will continue again up? It's so simple. The market will have to break the channel to the upside. The market will come, break the channel to the upside, and that's exactly what I'm expecting right now. The market will come, break the channel upside, go inside the green channel again, and continue again inside the green channel. Usually, when you see a spike outside the green channel, and then the market enter the green channel, usually I see this at the very end of a tired swing or a tired trend. So if I see this happening and then the market enter here, I would assume that the next swing high here will be my last swing. Why I would assume that? Because I know that we went outside the green channel and then we entered the channel again. The chances for us the next time we're going to cut this green channel, it's over. This whole swing is going to be over, and bam, it's going to continue to the downside, and another leg to the downside is going to start, and you're going to do the whole thing again, but just pointing down. Okay? Now, while you're going right here up, how do people know that the market will stop here, the market will stop here, the market will have to correct here, the market will have to correct here? It's basically divergence. You see right there, right this one here, you see it went higher high, went lower here, so you know that the market needs to correct. You need a reaction has to come right now. Right now, look, from this pivot into this pivot. You're right here, you're kind of flat, but in price, same two pivots, you went higher, you know that the reaction is coming. Boom, a reaction comes in a three wave, which is a small three wave, and then the market went up again. You look for the next one. Look, this one is going flat, this one here is going up, so a reaction need to come. Boom, a reaction came. Now with this diversion in the bottom, that tells me that the market will continue the strength up, and the market is going up. Of course, when you're writing a channel, a lot of aggressive traders, they take profits at the very points right here, and then they enter again, like boom, boom, in and out, in and out. I would not recommend that because you're gonna get crazy. All you need to do is just ride the entire channel, no matter how long it takes. You're just riding the channel. What happens if the price comes from here, and instead of going correction, I'm expecting a correction, and I'm expecting that a break of this channel might happen. But what happens if the market have enough power and the market went from here to right here, 11? Well, it's so simple. You're gonna get your green channel, make it bigger. Now it's even better for you because the more the market goes up, the more the channel gets wider, and that's amazing, you know. So let's say the market went all the way to here, so you get one pivot, so you have one, you have two, the new high, and then you reflected the green channel, where it is right here. You reflected to this pivot right here. In that case, the channel is getting wider. That means as soon as you see this happen, you have more hope that the more upside is to come. 13K, 12K, okay, things might get beautiful. But if the channel stayed here, well, it's the same channel. You know, we started this channel from July 28th. Now we're going into August 3rd, and the same channel has been there. They never broke the channel to the upside. This is the channel from day one. Let's draw it normal, from here to here, and from here to here, and we reflect it from this top. So this is the channel from day one. From day one, we have been riding the same exact channel. Every correction comes, it comes with a hidden bullish divergence, every single one. This one came with a hidden divergence right there. This one here came with almost a heading diversion, because you can actually say it came with a heading bullish diversion, because if you take it to this pivot, this is going lower, this is going higher. You see this? The next one comes right there. It also came with a hidden bullish divergence, and this is what we call the RSI's resetting, is just trying to reset for the next move. It goes down to reset. At the end of this reset, you're always going to see a hidden bullish divergence with either the previous major pivot or one of the internal swings right here, but you're going to see it all the time. So this is how you write a channel, and this is how you continue with it. You have no idea what's coming next, but you just keep going with it. If for any reason you took profit at any wrong spot, let's say you took a profit right here, did the market offer you another trade? Yes. Where and when? Right here, the market give you a potential trade, which is, you know that this pivot have divergence. But at this pivot right here, at this candle right here, the market tells you, okay, I'm breaking a red channel, and I'm still inside the green channel. What does that tell you? You can go long right here. Where are you going to put your stops? Either at the middle of the channel or at the bottom. So a trade right here will be a simple trade. For you don't need to know much about anything. All you need to do is you draw your channel, and right here at $10,107, where are you going to put your stops? 99.74. So from here to here, $100 risk, and bam, you continue up. If you for any reason took profit at the wrong spot, did the market offer you again a trade? Yes, right here. The market offered you again a trade right here. Every time the market will continue up, will reset the RSI, will give you the divergence, the market will offer you a trade. This is how you write a channel, and this is how you continue with the channel up. Let's talk, for those who love Elliott, let's talk Elliott and see. For whoever doesn't like Elliott, the next 5 minutes doesn't mean anything to you. Let's delete all this and let's just think about Elliott by itself. Control Shift I. So this is how I see it in Elliott. We have 1, 2, and we just did 3, and we're going to go in 4 to put 5. 3 itself, while you're going, you would assume 3 ends right here, right here, right here, right here, right here. What really tells you where 3 ends is, alright, 3 is the Fibonacci. So you're talking about 1, 2, 3. The normal target for 3, the lovely one, which is 1618. If it wanted to extend to 100 is good. 2618 is a really amazing one, and that's what we reach right here. So at right here, I assumed 10333. This one is gonna offer 3, and we're gonna have to have 4. The market have enough power. It drag up to the next one. Inside wave 3 itself, you have to have the same thing, 3 waves. So you can have 1, 2, 3, 4, 5, extended 5. 5 itself is long. So I'm gonna make this. Some people, you know, my software have what I call auto, which is inside a swing itself. Let's say I assume that this is 3. I can tell my software, okay, show me what's the perfect scenario that you have for here. So my software can tell me that this is 1, 2, 3, 4, 5. 1 itself is big, which is not bad, but I like it this way better. 1, 2, and I like 3 to be right here, and 4 to be right here, and the 5th is extended. Okay, and I have to measure Y. 3 here, we passed the 1618, that's perfect 3 for me. 4, we got 50%, that's perfect. The 5th is extended. Inside the fifth itself, I have 1, 2, I can do 1, 2, 3, 4, 5, or I can do 1, 2, 3, running flat 4, 5. Doesn't matter. Both will work. You can do 1, 2, 3, 4, 5, and the same thing. Now, if this is really the end of the third wave, which is, I actually think that we might a little bit go up right here to hit the 2618 exactly, 10-9. We can do that. We can do 1, 2, 3, 4, 5. We go up to here and then we start correcting. If they want to end it right here, that's fine. But no matter what, I'm going to have a correction coming, and this correction, it should be a strong one. And when I say a strong one, it doesn't mean that it's going to be the end of the swing. Nope. But my expectation for this coming swing, let me clear everything here, is wave 4. So a lot of times, if it's not going to be a triangle, most likely it's going to have to break the green channel to the downside. And this is going to trick all the bears in the market, because once this channel is broken to the downside, everybody going to take a short right here. But it's, if they're smart enough, they're going to take a short right here against the green channel. Once the price goes back into the green channel, they have to be out of the trade and they have to be long again. So 4 might come over here. 3 itself might not be ended. It might end right here at the exact 2618, or a little bit spike, it's fine. Right here, 10-9, and it goes right here. So let's see how they're going to fold this. Are they going to touch this one, which is pretty much expected, and then go down right here? Wave 4 usually goes between 38.2 to 50% from the wave 3. So 4. Let's assume the end right here. So this will be my target. I will leave the trade here. I will enter the trade again once we break the channel here, hoping that we're going to enter the channel again. So either I take a short. This is, you know, this is not an advice for anybody. This is just me. That's how I play. When I expect 3 to complete, you know, to be a aggressive 3 like this, and I think this is the area where the reaction is going to come, I have to look for divergence. I have to make sure 100% that this pivot that's coming is going to come low. It cannot come high right here. If it comes high right here, I would not take a trade. I need it to be low. I need the RSI to be something like this, to end right here. Even if it ends right here, I don't care, because basically all what I'm looking for is this pivot right here. I need from this one to the new high to be going down, and I need it from here to be going up. And why did I look for this one here? Because this is I assume this is the old third, the sub inside the actual third. So I want the fifth with the third to have divergence. So I need the RSI to go here. If the RSI spikes high and continue higher like this and pass this pivot, that means there is no short. I cannot short the market. This is wrong. Even if I enter a short and then I see the RSI went up, as soon as RSI passed this pivot, I have to be out of the trade. Why? Because that's it. I know there's no divergence. It's over. Continuation to the upside is coming. So this is how you look at it from Elliott. And even in Elliott, you still draw the channels. Channels are everything in the trade plus the divergence. All right, guys, good luck.